off-the-plan sales crash? Let's have a look. Hello everyone, I'm Florian.Heise and welcome to another episode of HeiseSays. I'm still working through my morning stein of coffee and I thought we'd have a look at this article from the Financial Review regarding 1 in 10 off-the-plan apartment sales collapse, so people are losing out. Now before we have a look at this article, let's jump over here to Google Earth. And you can see here I have a series of buildings that I've tagged. And we zoom right into Sydney. We'll look at some of the famous names that we're all familiar with. Mascot Towers, Zetland Apartments, Otto Rosebery, Joshua, Sugar Cube. I call these the triangle of fail here. You've got all Botany Bay down here. You've got ground contamination from an old industrial part of Sydney wreaking havoc right there. And people paying a premium for these buildings. You've got Opal Tower and you've got issues just around the entire country. You've got Verve in Newcastle. Kingston has issues. Everything has one thing or another. Darwin isn't immune. Perth isn't immune. Brisbane and Gold Coast are not immune. And often we'd hear that it's off-the-plan buyers. Off-the-plan buyers. Everyone remember the story about the gentleman who bought an apartment off the plan. It was a ground floor one, and he had a courtyard area. But then all of a sudden he lost the courtyard and it was garden. Save money. Nothing he could do about it. It's ludicrous. Particularly in New South Wales, the way these contracts are written, how they're in favour of the developer, and it just seems insane. I don't know why people are, I know why people are buying off the plan. They're buying off the plan on the hopes that the property will go up and they're getting a bargain. It's like buying a computer game, pre-purchasing it, or on Steam, greenlighting something. It's brave. It's not something I would do personally, particularly with all the construction issues that have occurred. Now you've got Opal suing for 500 extra defects, and I'll have to look at that. What do you think, guys? Do you think this is the beginning of a decline in off the plan? So 1 in 10 off-the-plan apartment sales have fallen over during the past 3 months, as lower valuations, due to weaker demand and oversupply, prompted banks to reject final loan approvals, forcing buyers to give up millions of dollars in deposits. So there you go. So this is another aspect to it, that one I haven't even mentioned. I'm here worrying about just the construction issues that occurred that can occur in buildings. And that if you're buying off the plan, you're buying it before it's even been built. And there's a lot of things happen in the construction process, everyone. You've got to remember, a building isn't like a car. It's not like a computer. It's not factory produced, even if they are. It's a one-together work of art that's brought together. And that's unique. And there's challenges to it. Defects on every project happen. It's just impossible to avoid. It's just part of it. And you've got to account for that. But you kind of want it to be broken in. You want to at least a year or two old already to see the wear and tear. So they've found the leaks, so you know what your costs are going to be. So out of around 35,000 off-the-plan settlements between March and June, 3,041 have collapsed due to problems with a lower valuation, an analysis by DFA, Digital Finance Analytics, showed. So Martin North, I think he spoke about this on the radio as well. So there you go. We're starting to see lower valuations affect these people, and they can't get the funds. We've heard the horror stories, where they've had to sell other properties or get money from family because the banks aren't going to lend it out. And our cash rate is non-existent, 0.25%. I need to update this chart, but I can't be bothered. It's probably kind of good leaving it here to see how long it hasn't changed. This amounted to a potential loss of $87.6 million in deposits alone, not including the other charges developers impose when buyers pull out of the sale. In Sydney's inner west and eastern suburbs alone, 551 apartments failed to settle, as did 457 in Melbourne's inner suburbs during the same period. And we've seen the same thing with land down in Melbourne. Apparently people were trying to sell the contracts on Facebook, trying to sell the land to get out of having to build a house on these properties and all of these things. Off the plan values have dropped between 10 and 15% during the past 12 months, on average higher than the previous years, digital finance analytics principal Martin North said. So we're starting to see, how's this going to affect property prices? Property always goes up, Florian. Property always goes up. Isn't that the line? Rent money's dead money. Values are likely to fall further given oversupply in the sector. And you can see that in different parts. I mean, here's the thing. When they present the big numbers, they'll be talking, oh, Sydney's gone up 4%. But you've got certain parts in certain cities, like Brisbane's gone up this much. Like West End, South Brisbane, there's so many apartments there. It's crazy. They're offering to pay a year of your mortgage on one development, which is essentially about a 4% discount that they're dressing up. That just shows you. It's starting to get desperate. The proportion of off-the-plan apartments racking up large losses in values at settlement has surged over the 3 months to May, CoreLogic data said. More than half, 52%, of the 3,389 off-the-plan properties across Sydney had a lower value at settlement compared to the contract price. So these property geniuses that are buying an unfinished product aren't property geniuses, are they? I mean, I can't blame people. We're property obsessed here in Australia. Values fell by more than 10% for 1 in 4 Sydney apartments since the contract was signed, which is likely to have been in 2017 before the bank regulator tightened lending rules on property investments. And what else is interesting in 2017? If we have a look here, it's just the beginning of the cooling off of the huge amount of building approvals driven by foreign investors. Across Melbourne, more than 1 in 2, 51% of the 4,173 off-the-plan apartments were less at settlement compared to their purchase price. Values plunged by at least 10% for 1 in 5 apartments since the contract was signed. I mean, that's a decent hit for doing nothing. In Brisbane, we don't miss out. 41.7% of off-the-plan properties have lost value since being purchased. 49.4% in Perth, 25% in Canberra, and 20% in Adelaide. So every city has taken a hit. And I remember back in uni, I had friends who were, saying, buy off the plan. A whole bunch of architects at one big firm went in and bought one unit in a big development they worked on. And, they were making money on it. That was a different time to now, isn't it? That was before we entered the first recession in nearly 30 years. CoreLogic research analyst Eliza Owen said these trends were not just the result of the pandemic. No, they're not. There we go. It's good to see. Undervaluation of off-the-plan apartments across Sydney and Brisbane has been rife over the past 2 years, averaging 46.4% in Sydney and 42.7% in March, Ms. Owen said. This is the result of falling levels of investor interest off the back of temporary prudential lending measures against increased levels of apartment completion across the cities. So essentially we've got oversupply. So that property everyone's invested in, that one apartment in 350, that unique special piece that's exactly the same as everyone else, it's not worth as much. I mean, I shouldn't laugh, but that's how it is, isn't it? However, the pandemic will have a compounding effect on some off-the-plan unit markets through border closures and job losses. And we'll have to see what happens we're not going to see the real effects of this until next year. It'll be in February when we start seeing the real impact. That's when definitely, the whole unknowns about JobKeeper are gone. The whole unknowns about the job seeker bonus are gone. The bank mortgage holidays are gone. And then people that would have burned a bit of money on Christmas, ignoring everything, and start to feel the pinch. What do you think? Do you think am I dreaming there? Or do you think it'll be earlier? The additional downward pressure on rental returns created by localized increases in vacancies will make inner-city apartments less desirable and could lead to an increased proportion of undervaluation events for off-the-plan apartments. HomeLoanExperts.com.au Managing Director Otto Dragon said bank valuers were often more conservative than the market itself. I don't know. I'm seeing my bank valuation and I'm comparing it to a property across the road that's going for about $100,000 less. It's probably a lot nicer than mine. That's not moving. If the market drops 1%, then valuations will come in 5% lower, he said. Lenders will usually ignore the purchase price if buyers signed the contract a long time ago and instead use the bank valuation. That makes sense, doesn't it? This means that they will lend you less if you have a low valuation, which can leave some purchasers who don't have extra funds available to complete the purchase and lose their deposit. Well, banks are not our friends, everyone. Banks are not our friends. They're businesses. Their business is managing and reducing risk. That's all it is. Just think of it like that. Everything they're doing is to reduce their own risk. They're not doing it for being nice. All those touchy-feely commercials they put, with family and all that, it's just rubbish. It's marketing spiel. Ignore that crap. They're risk managers. Why do you think they're doing all this? Why do you think they're giving people mortgage holidays? To reduce their risk. To reduce the risk of people forced to sell. To reduce the risk of a collapse in their assets. Heightened risks for off-the-plan buyers. The biggest risk for buyers who have lost their jobs or had their income reduced in the last few months and no longer qualify for a loan, said Rise High Financial Solutions, Marisa Schultz. If you can't proceed with the purchase, you risk not only losing your deposit, but also paying up for damages if the developer can't sell it for the same price, she said. It's the same as going to an auction without finance, then scrambling to get a loan after winning the property. See, look at this risk. Why would you sign up for it? I know why people are signing up for it. They want to get in. Property always goes up. If something does fall over and you didn't get finance, you stand to lose a lot of money. Suburbanite principal Anna Porter expects things will get worse for the sector. I think there's a looming crash in off-the-plan properties in oversupplied areas because buyers are walking away despite large financial losses, she said. What do you all think, everyone? Do you think we'll see this materialize sooner or later? Would you jump at an off-the-plan apartment? Would you even look at an apartment? Personally, I'd only think about a little, 80s bricky, 3 stories high without a lift. Maybe that's just me. I'm just getting old. As always, let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. Interacting with the channel helps the YouTube algorithm know you like the content and will share the videos. You can support us by joining the channel on YouTube or Patreon, using our affiliate links at Amazon or eBay or independent reserving Kucoin, buying our merch from HeiseSays, using Gold Pass from the Perth Mint, or supporting us via PayPal. Thanks everyone. I'll see you next time.